Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Masser and Tim Stennebeck on Bloomberg Radio.
Hey, listen, folks, we did get a key inflation gauge. It came out earlier this morning. It grew at a slower pace last month. We also got some data on a resilient U.S. consumer. We also saw incomes growing, and yet U.S. consumer sentiment fell in the month of September to a 4-month low on growing concerns about the impact of high prices on personal finances. Richmond Fed President Thomas Barkin spoke with Bloomberg TV and Radio international economics correspondent and policy correspondent Michael McKee before this morning's batch of U.S. economic reports. And he talked about the Fed's dual mandate and keeping an eye on all the data as it continues to come in.
It's a low hiring environment, but the labor supply is also short. And you have to be very attentive to that balance because it could get out of balance, right? Similarly, on the inflation side, you do have these cost pressures and 4.5 years of inflation over target. On the other hand, you're not seeing that show up in spikes in inflation in the real-time numbers. We are seeing what seems to be a productivity boom. And so I think you have to be very attentive to how little we know about how each of our mandate variables is going to play out. And so, I feel like very adaptive is the way to think about it, and that's part of why I'm not being prescriptive into, it's this many cuts over this period of time, because I think we're going to see and learn a lot as we go here.
Adaptive and attentive sounds like data dependent. That is Richmond Fed President Thomas Barkin earlier this morning on Bloomberg with Bloomberg TV and Radio international economics and policy correspondent Michael McKee. Mike joining us from D.C. along with Elizabeth Renter, senior economist at the personal finance company NerdWallet. We'll get to her in just a moment. But Mike, I do want to start with you. This morning's data, drop of U.S. data, and what you heard from Fed President Barkin, does it all kind of mesh with what we got in the latest Fed decision and commentary?
Maybe not. And that's the situation that Tom was describing is we came out of the Fed meeting thinking that they were going to do a rate cut in October, and there was a good chance of another one in December. And then over the last 4 or 5 days, we've gotten a number of data points that suggest that the economy may be rebounding from a summer low, maybe stronger than we thought. Second quarter growth was revised up, and today we got better than expected spending numbers from consumers. So at this point, it's really hard to say what's going to happen. The one thing we know from today's PCE report is that inflation is not going down. It didn't get any worse, but it is still closer to 3% than the Fed's 2% target. So it just kind of means that those who are in the middle for the Fed, they're probably going to be waiting till much closer to October 29th to make any kind of decision.
Mike, is there a shoe to drop when it comes to inflation as a result of tariffs? Because we did have so many companies pull forward goods purchases before tariffs hit, and we just haven't seen it show up. We're going to start hearing from companies in the middle of next month for their latest earnings report, but we're not seeing the spikes in inflation like he was talking about to you.
Well, we have seen some. We've seen prices go up for some goods, and there are expectations that we'll continue to see that. It depends, as you mentioned, on inventories and how fast those are worked down, and then supply chain adjustments. It's very hard to say exactly when things are going to hit, but economists do expect, and the Fed does expect, to see inflation rise over the next couple of months. Then the question is, does it go down again, or does it keep going up because maybe the president is continuing to put on additional tariffs? The one thing that we can probably intuit is that Americans are not happy. The consumer sentiment numbers went down because of inflation. And even though it doesn't have a lot to do with the president's tariffs, gasoline prices have gone up, meat prices have gone up, turkey prices have gone up. They're for different reasons, but when you go to the grocery store, it's all just inflation to you.
Yep. I don't do a lot of the shopping in my house. My husband tends to do it. My daughter.
You've got people to do that.
No, my people are my husband and my daughter. But man, they brought some steaks, and I was like, "How much did they cost?" When they told me, I was like, Elizabeth, come on in on this, because we are continuing to get data points. How does that cross with what we did get from the Fed and your view on where the economy is and what needs to be done in terms of monetary policy?
Well, I think largely what's been said is accurate. You know, the Fed is trying to keep their eye on the ball. We're all trying to keep our eye on the ball, but there's a lot of balls in the air right now, and some of them are flying in completely different directions. So it's really hard to suss out where things are headed. When it comes to inflation, yes, it ticked up just slightly, but it's not showing real acceleration right now. To your point, consumers are feeling a bit of a burn, more than that headline number would have you believe. You know, food inflation rose last month according to today's data, and that's something we all interact with on a weekly, if not daily basis. We see that number. And so that's definitely playing into consumer sentiment. Also, we're more exposed to all of this talk about the economy, right? We're all talking a lot about when inflation is going to pick back up, the impact of tariffs. And so that's in the back of consumers' heads as well. So they anticipate a lot of potentially bad stuff happening. As of yet, we haven't seen it translate into reduced spending from a big picture. Overall, I'd say this week we got some more of those mixed messages, though, right? Consumer spending is strong despite weak sentiment. The economy continues to grow according to the GDP figures. I say if there's some good news out of this week, in addition to the consumer spending, is that the initial claims came down, the unemployment claims. So that's a bright spot, I suppose, on the recent past labor market.
You know, I'm thinking of a conversation that Tim and I had yesterday with the CFO of a firm, right? And we talked to the CEO just a couple of weeks ago, and they're saying they're pretty busy. There's a lot of activity on their platform. We were thinking, well, wait a minute, how does this mesh with maybe a slowdown in consumer, or concerns about the consumer? And our own Stuart Paul kind of weighing in that, well, what's happening is people are buying, but they're buying and taking longer to pay for things. And that's why they're making use of that platform.
Like essentially, if he sees a service such as that being used, then it could be a sign about the way the consumer is feeling. Elizabeth, I want to go to you on next week and the non-farm payrolls print that we're expecting a week from now. We'll be sitting here talking about that number. 50,000 is the number of jobs that economists surveyed by Bloomberg expect to be added to the economy. How is the labor market in your view?
The labor market is hanging in there. You know, I think the big question next week is not only what we're going to see in the jobs data, but if we're going to see the jobs data.
I saw that story, right? If there's a shutdown, the BLS would delay the next U.S. jobs report.
Right. And this is crucial data for monetary policy, as you all know. I mean, ideally, if there is a shutdown, it will be brief, as recent ones have been, and the Fed will still have that data in hand before their next meeting. Regardless of when we get it, I anticipate that data is going to show, weaker job growth as we've seen over the past several months. But I do believe the unemployment rate is going to remain relatively steady. The break-even rate, or the number of jobs we have to add each month in order for the unemployment rate to remain steady, is decreasing. And that's because the labor force is decreasing, right? We know we're not getting as many immigrants right now, and some immigrants that were already here, already working, maybe leaving the workforce. The magnitude of that, a little uncertain, but I do believe that's going to help hold that unemployment rate where it is.
Mike, saving 30 seconds for you, because I think we have to bring up Fed Governor Lisa Cook. This case before the Supreme Court. President Trump wants the Supreme Court to, I guess, give him the okay to fire her. She's fighting it as well. Just quickly, what do we know? What might we get in terms of news either today or potentially over the weekend?
Well, a decision could come any time by the court, and they have tended to move quickly in these Trump firing officials cases, except that in this case, there are a lot of amici filings, friends of the court filings, that the justices may want to wade through. And also, we've seen in a couple of controversial cases that some justices want to dissent. And so that takes some time to write. So we don't exactly know when we are going to get this decision. If the court allows her to stay in the job, then we kind of lose the headlines for a year or so while it goes through lower courts. And if they fire her, then, of course, we'll be back here immediately talking with you about what happens next to the Fed.
Right. And we talk about whether or not we have an independent Fed anymore. All right, Mike McKee, thank you so much there in D.C. Bloomberg's Mike McKee, along with Elizabeth Renter, senior economist at NerdWallet.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, former FBI Director James Comey has been charged with lying to Congress and obstruction related to testimony he gave in 2020, accelerating President Trump's push for legal action against his perceived political enemies. Now, after the indictment, Comey said in a video on Instagram that he is not afraid. His lawyer, too, Tim, has come out with a statement.
Yeah, his lawyer said Jim Comey denies the charges filed in their entirety. We look forward to vindicating him in the courtroom. I want to bring in Bloomberg News Justice Department reporter Chris Strome. He joins us from Washington, D.C. Chris, a relatively short indictment. What exactly is James Comey alleged to have done?
Well, the process here is highly unusual. The charges are highly unusual. There's 2 charges against Comey. It's for lying and obstructing a congressional proceeding related to testimony he gave in September of 2020, which was just about 5 years ago, which was right up against the statute of limitations for DOJ to go get these charges.
So I got to say, all of us are, I think, doing a deep dive to try and remember. I can't even remember what happened on Monday. So to think about what happened in 5 years ago. Although when you start doing it, you're like, oh, yeah.
I think Monday was the Tylenol press conference. Okay?
It was.
That's how I remember.
Well done. Well done.
Thank you.
So, but Chris, take us back there and what it is that he is charged with lying about.
Yeah. So during the hearing, it was before the Senate Judiciary Committee. He was asked about a situation in which his deputy, Andrew McCabe, had leaked information to the Wall Street Journal about Hillary Clinton. And Comey was asked if he stood by previous testimony he had given that he didn't authorize the leak. And he said he did. Now, the Justice Department is trying to say that Comey wasn't telling the truth because he was involved in authorizing the leak. And it goes back actually to 2016 when there was a dispute between Comey and his deputy, Andrew McCabe, regarding the leak. McCabe had said that Comey approved of the leak after the Wall Street Journal reported on it. And Comey said he had no memory of that. The Justice Department Inspector General looked into this and issued a report that found that Comey was telling the truth and McCabe was lying about it. And so essentially, Comey was reiterating that he had no knowledge of the leak. But the Justice Department is trying to say, well, Andrew McCabe said you did have knowledge of the leak. And so therefore, we are going to charge you with lying. Now, the Justice Department might have some additional information, but this has been well investigated. And to our knowledge, there's no new information that would prove Comey was lying.
So it raises the question, and back to what Patrick Fitzgerald, the lawyer for James Comey, said. He denies the charges filed, and we look forward to vindicating him in the courtroom. Does it make it to a courtroom?
It's hard to know at this point. Comey is going to have an initial appearance on October 9th. I'm sure that his lawyers are going to move to just dismiss the charges before they ever go to trial. Getting charges dismissed is very difficult. So it's probably more likely that they will end up going to trial. I would expect Comey and his lawyers to call for a quick trial because they believe the facts are on their side and that Comey can get acquitted.
What about a history lesson for everybody, a civics lesson for everybody? I mean, do presidential powers extend to something like this and using the Justice Department to maybe go after presidential foes?
Well, this has been one of the raging debates under the Trump administration, both the first Trump administration, but definitely under the second administration. How far do Trump's powers go as president? Now, Trump will say that he controls the Justice Department, that he can order prosecutions, that he is the chief law enforcement officer. Historically, the Justice Department has maintained independence from the White House and from the president. But that's largely based on norms and traditional practices. There's no law or regulation that says the president can't interfere in prosecutions.
Yeah, I guess I would say some presidential historians would also suggest that maybe you Google the Watergate, like at this point, right? Like,
well, that time you had a lot of pushback from Republican senators who made their way to the White House, and we haven't heard that this time around.
Right. So, like, we'll see, right? We'll just have to, I guess, kind of wait and see how this plays out. Interesting story. Another one certainly on our mind. Chris, thank you so much for running through it for us. Chris Strom, he's Justice Department reporter, joining us from Washington, D.C.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
In the meantime, we continue to piece together the life of Jeffrey Epstein. Bloomberg News has gone through more than 18,000 emails from Epstein's personal Yahoo account that was obtained by Bloomberg News. That cache revealing, Carol, a sweeping array of details about not just his public life, but his private life as well.
Exactly. We want to get into it. It is today's Bloomberg Big Take. Bloomberg News finance reporter Max Abelson, part of the team who wrote it. He's here in studio. Max, so good to have you here. Another incredible read. It is among our most read stories on the Bloomberg. First of all, step back. We've been covering this, right? These emails. Remind everybody the emails that Bloomberg got access to and what you guys have been going through.
Yeah, that's right. It's been one of the highlights of my 20 years in journalism to be a part of this team with Surya Matu and Jason Leopold and Ava Benny Morris and many others. So, Epstein, who remains so profoundly central to the public imagination and yet such a profound enigma, Bloomberg News obtained, thousands. More than 10,000, more than 18,000 emails. And I want to be clear, these are private emails. These aren't things that have been recycled through, it's not things everyone knows about. This is new stuff. And it's from a private email address. Actually, for example, there was one email where someone says, listen, I need to talk to you about something private. What email would be good? And he writes back and says, this one, to give you a sense of what we're talking about here. And my colleagues, including Harry Wilson and others, did some really remarkable reporting on Peter Mendelsohn, who lost his job as the UK ambassador to the United States.
Exactly.
In the wake of their story. And Ava Benny Morrison and Jason Leopold have done, and others have done great work on Ghislaine Maxwell and really carefully showing that her relationship to Epstein was just much deeper and their partnership was much closer than either had admitted. And what this story, which I wrote with this wonderful team, what this story is about is, in some ways, I hope, not the usual. Epstein is, of course, in some ways a story about sex and sex crimes. But I think what you'll find is that what this story is about is about what I cover. It's really a story about money and a story about power and a story about connections. And that's how we talked about it with our editors, including Lauren Eder.
And it's can I just pop in that there's a bunch of people pictures, and I'll be honest with you, I think when we both look, I didn't recognize most of them.
Well, that's what I think was so notable about this. I mean, there are certainly the names that have been associated with Epstein for years, like Alan Dershowitz, for example. Right. And there's new information, new emails from there, and a conversation that your team had with him about that. But there's also a name that I'd never seen before. Mary Spaeth, somebody who's a crisis strategist. She was director of media relations at one time for the White House under Ronald Reagan.
Yep.
What role did she serve?
Well, thanks for that question, because I think what's special about the piece, and I hope viewers and listeners check it out, I think what makes it a valuable piece of journalism, especially at this moment when Epstein is really in the news and is all of a sudden has gone from being an exclamation point to a real question mark. And there are a lot of questions about what's going to happen now over the next few days and weeks and months with Epstein and his files. What our story is about, and why Mary Spaeth comes up, is that it's about the depth and the breadth of his relationships. And, it is not a story about Republicans versus a story about Democrats. It's a story about powerful people. And it's a story about different kinds of power. It's a story about academics and researchers, people who make it into high elite echelons of the intellectual life. It's about people who offer, like Mary Spaeth offers, a basically strategy for people who are in trouble, crisis strategy, public relations. And it's a story about counselors and lawyers. And And to answer your question about Mary, there was a point, believe it or not, where investigators are closing in on Jeffrey Epstein. This is early 2008. He's about to go to jail for it's like about a year. It's a little bit longer than a year.
Right.
And after that, he's a free man for a very long time. I think about a decade, until the 2019 charge, sex trafficking. And then he dies. He's found dead in prison or jail right after that. But back in 2008, investigators are circling. Epstein's in trouble. And what do we find in these emails? But these draft apology options where she sends him 3 different kinds of apologies. One is one's very meek. Talks about his memories of being a kid. So actually, I found it very deep. Imagine, all of us remember being kids and having to apologize. Second one is very short. It's really terse. But the third one, it's the word we use is elegiac, and he cites William James. I'm hoping it's the first Bloomberg news story that calls out William James, 19th century American philosopher. Talks about the hour of terror and the hour of satiety. How about that word? And he talks about the American dream. Talks about the American dream and its substantial rewards. And he says this is a public and heartfelt apology.
I just want to say Space Firm was hired through a lawyer to provide communications options for Mr. Epstein and his legal team. She said in response to questions for the story, she said, quote, "I ultimately terminated the engagement because of my discomfort with it."
That's right. That's right. Thanks for saying that. I think it's really important out of fairness that we add things like that. And she also said, because of confidentiality and privilege, she can't comment further. But, we don't know what was going on here. I want to be clear with our viewers. Right. For all we know, Epstein was really very close to saying sorry, but he did not. He did not in the sense of giving a broad apology, right, certainly to his victims. And I want to be clear, the U.S. Department of Justice says there are more than 1,000 of them. More than 1,000 of them. And Epstein did not give a heartfelt William James quoting apology as far as we know. But our story shows what it could have potentially sounded like if he had.
It's why we say there are so many questions still out there. And you guys, by going through these emails, maybe there's not direct conclusions, but you start to piece together, kind of a little bit more of the life around Jeffrey Epstein. Yeah. Max, thank you as always. Max Abelson, he's finance reporter at Bloomberg News. This is The Big Take. Check it out on the Bloomberg.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
All right, TikTok, everybody. Just about 19 minutes to go until we wrap up the trade for the day and for the week. Overall, we are expecting a down week on the S&P 500. This after 3 consecutive weeks of gains. However, there is one name that is definitely on our radar. I've had to play around with the gainers that I'm going to talk about with my TV colleagues, because as soon as we saw the headline popping about electronic art said to be near a takeover by Silver Lake, initially reported by the Wall Street Journal, this is about a $50 billion maybe deal to go private.
That's big.
That, according to people familiar, that would be massive.
It's not just Silver Lake, but also Saudi Arabia's public investment fund. This, according to people with knowledge of the matter. The video game maker is known for Madden NFL, The Sims, and then Carol's favorite, Battlefield. I walk by, she's just playing that all the time.
Love it.
Could announce a deal as soon as next week, said the person who asked not to be identified, discussing confidential information.
Stock up about 14% as we speak. So we said it could be a $50 billion take private. Right now, the market cap at $48.2 billion. All right, let's talk about, not necessarily that unless she wants to, but let's talk about the stocks overall. For the day, for the week, Carol Schleif is back with us, Chief Market Strategist at BMO Private Wealth, joining us from Minneapolis. BMO Private Wealth, by the way, $315 billion in assets under management. And I got to say, if you're lucky enough to have a 401k and you've looked at it recently and you're buying the market, Carol, you're pretty happy.
It's thumbs up. Yeah. Yeah, you are pretty happy. And it almost doesn't matter what segment you're in. And it's actually better to spread it around this year, because in particular, diversification, which we preach all the time, it definitely worked this year.
So let's talk a little bit about valuations, because Earlier this week, we heard from Fed Chair Jay Powell. He was asked about stock valuations. There was not an irrational exuberance moment.
No.
There was not.
Nope.
He did say it's not a time of elevated financial stability risks, but he also said, Carol S., some asset prices elevated versus historical levels, and by many measures, equity prices are fairly highly valued. Is he right?
Yeah, they're rich, but it's also important to put the caveat in there. And actually, the piece I wrote this week for our field was called Bear Hunting. And we talked about valuations in there. And one of the things that's important to recall is that valuations are not what kills a bear market, or kills a bull market, nor do they revive a bear market. Things can stay over or undervalued for a great length of time. And it's usually something structural that brings markets down. And so, yes, the valuations are high, but earnings estimates and GDP estimates have been brought down low because no one knows exactly how to filter through all the impacts of everything thrown at us this year. And the one theme that's been very consistent is the resiliency of businesses, the economy, and consumers.
It's kind of wacky, right? Like just in terms of the moods of this market, like you go back to January, and I think we were still in the Biden economy and people were still talking about U.S. exceptionalism. And then we got the inauguration and the White House started, implementing executive orders and different initiatives. And then, of course, the tariffs. And we saw stocks sell off. And then we've seen the bounce back as things kind of eased when it comes to tariffs. It's just been kind of all over the place. Is there a dynamic, though, to this market, that you kind of can cling to?
I think the dynamic we've been clinging to and the thing we've urged investors to cling to all year is to follow the fundamentals and to look at companies and to listen to what companies are doing and watch what they're doing. And it's interesting because we also had, in addition to all of that, we also had the big disconnect between the hard data and the soft data for a long time, where the sentiment, and you still see inklings of that, particularly among consumers. But we've also encouraged clients to step back and think through, this is really the mirror image of what you had in Trump 1.0, where when he came in there, you had a lot of really optimistic things going on with the economy. And then we had tariffs hit in the back half of that. And then we had COVID, and everybody has collective lack of recall of what came before COVID in a lot of cases. This time around, if you recall, after the election and into early January, we came in with a lot of optimism. Wall Street staffed up thinking we were going to have all the M&A and IPOs and all of that go on. And then we got hit all of a sudden with tariffs and trade policy and geopolitical issues, and markets took a step back and looked at that. And now we're back to where a lot of that stuff's pushed aside. Markets are desperately trying to get to the other side of tariffs and focus on something else. But businesses through it all, and that's one of the advantages we have, is that we bank and multi-generational businesses, and we also manage the money for those businesses when the liquidity events happen. And so we're plugged into a lot of that. And when we talk to the business owners and the commercial teams we have that serve those business owners, they've told us throughout that they're adapting and adopting as best they can. And they're nervous, but they still have to grow, and they have to continue to do business because they have shareholders and bankers and employees to take
What are
care
they
of.
nervous about?
I think they're just nervous like anybody else, trying to figure out, where does the next policy change or shift come from? Where are there?
I think the answer is Truth Social. That's where it comes from.
Maybe it's social media, but the hard part is it amplifies moves too. And even when you go do a search on social media, your search is going to feed you your personal preferences, if you will. You have to be active about searching a variety of sources, or active about searching out something that's going to be neutral and down the middle. And so, yeah, it's definitely been a challenging year. But the process of having to write every week really helps, because we're trying to sort through of all of this stuff going on.
Right.
what is the impact for portfolios moving forward.
Carol, but I thought it was interesting that you said that the work that you guys are doing for businesses, that even though there's some concerns and uncertainty and fears out there, that they're making decisions, right? Because they have to run a business. And if it's a competitive world, as we all know, and if they kind of delay, miss something, there's potential that they're going to lose share, right? And they're going to fall behind.
Yeah.
So that they're pulling, that they're actually moving ahead with things, even like we see in the IPO market. That's a good sign.
Yeah, it's a great sign. And we've been talking about for some time, when you look at the stats of what's out there, because we've had such a locked up IPO market for such a long time, I've seen some estimates recently of as many as 30,000 companies that are revenue and earnings generated, mature companies in venture capital and private capital portfolios. If even 1% of those go public. The other thing that's really interesting is when you were tracking the earnings as they came in the second quarter, they're technically, according to Bloomberg, there were only 497 names in the S&P 500. So we've had this net reduction of public companies out there. And so having some IPOs, because we peaked in terms of public companies back in 1996, I think it was. And currently there are more ETFs than there are publicly held companies in the U.S.
Interesting. Wait. All right. Wait. We got to go, but we got to come back on that point at some in the future, because I think it's an interesting dynamic to this market and what it says. Carol, thanks. Glad we could reconnect. Carol Schleif, she's Chief Market Strategist at BMO Private Wealth, joining us from Minneapolis.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.